If I'm in that situation, I really need the money for my company, and the investors are like, no, the times are bad. How do I negotiate? So have you ever been in a situation where the investor pulls back because of uncertainty and you are desperate to have investment in your company? That's where the second closing option comes in, and you can make the uncertainty to an opportunity instead.
Indeed.
So stay tuned, because we're going to talk about this in this episode, and at the end of the episode, you'll learn exactly how to turn uncertainty to possibilities.
And get the investor to invest.
Yes.
At that point in time where it is uncertain, where you need the funding the most.
To keep going.
Yeah, to get off the ground, to get where you want. Because, it's not when you are validated a huge success that you need investment. You need it here. You need them to believe you and have faith, right?
Yes. So if I'm in that situation, I really need the money for my company, and the investors are like, no, the times are bad. What do I say to them? How do I negotiate? So
this is an alternative to the convertible, because the convertible will not always be attractive for the investor. So in cases where you have an investor that's interested in investing the full amount, so to speak, so you're not going to do a new fundraising within the next, say, 12 months, and the investor does not like the uncertainty that comes with not knowing the valuation, which is the case with the convertible, where you say you will invest a loan, and then at the next funding round, you will convert that loan into shares at a discount to whatever price that funding round is to. Let's say that the investor does not like that, which is common. Then we have another option for you. The second closing option.
Wow. Yeah. Tell me more about it.
Yeah. So let's go for an example. Let's say that you have started a tech company and you have a patent pending, a patent registration. That will come within 10 to 12 months. And you know that if you get a yes, you get that patent, you have a home run. You know everything is sweet. Perfect.
Wow. Of course it is.
Yeah. But during that 10 to 12 months, when you're waiting for the patent, you must have funding. So you have all of your ducks in order and you're ready to launch, and you can provide all of the information for that patent application, because that's still a process ongoing. So you turn to an investor and you ask for 10 million. And you say, well, I know that once I get the patent, the valuation of this company will be 500 million. Let's just invest for 100 million. And the investor says, well, at the current situation, you have no patent. And that means that in the current situation, I see your company as worth 50 million. Where do we go from here?
Where do we go?
I'm still willing to invest 10 million. Holistically, we still I have interest and I kind of like it. But I do not agree with your valuation, and I feel very uncomfortable investing before the patent is approved. And the company, it's now you need it. Otherwise, you won't even make it the next 12 months. It will be over.
Yes. So how do we go from here? How do I negotiate to that investment?
What we can do is we can say that, okay, we agree on my evaluation of post-money 100. You invest only half of the investment now, 5 million. 5 million you invest and you get shares for the valuation post-money of 100. The other 5 million, I will give you an option, or it can be a warrant, to invest at the same valuation, 100, within 18 months. That means that you can wait and see, and if I'm right, I get the patent, then the valuation of the company will be 500. So in total, you will have made a profit if you invest 10 million at a valuation of 100, because the valuation will be 500. But you take a bigger risk with the first portion only of your investment. So we do a risk sharing where you get an opportunity to take a risk, but also to wait and see, and then you will be rewarded if everything turns out okay. And you know we have the same incentive. Because I want you to get the patent, you want me to get the patent. So there's no risk about us playing each other in that sense.
Wow, so you split it.
Exactly.
Wow.
So one portion now, and the benefit is that you get to wait and see with the other portion. You know, the investor can get comfort because they will know exactly the valuation at both times. And you can agree that you will do no other funding round within this period, so he knows also that he will not get diluted. So the issues that come with negotiating a convertible are not the same as here, which means that many investors will be both impressed that you can come up with this solution and enticed by it, because many angel and VC investors, they go for high risk and high reward. That's why you invest in startups, really.
Yes, but what happens if the patent don't go through and you promised warrants or something?
Well, then I decide not to use them.
So it's not obligated to use them?
No, because you see that you have still a viable business. It's okay, you can keep going, but then you only invested a portion of your money. Okay. So it's a risk sharing. You have to be willing to take the risk and fund the company early on, but not with the entire amount. So you will get a reward if it turns out okay. And it doesn't have to be something as on and off as a patent. It can just be validating a new market. You can come to an investor and say that I need funding to go into Brazil, or I need funding to go into New York, and I want the proof of concept, and then I need X amount. And then if that turns out to be true within 12 months, you get to invest the same X amount, but at the same valuation, because I will give you options. So it can be used in many situations.
Yes, I can hear. But is it more common now when the times have been uncertain that you use these kind of methods?
I think I've always seen them, but I would say that I typically see them with very savvy founders and business owners. And what we are hoping to do here is help you guys out so you see all of the possible ways you can talk to investors. And if you're on the other side of the table, if you're an angel investor, is this something for you? Perhaps you can offer that if you have a startup that you really like, but you feel that they are facing a great deal of uncertainty, then you can say that I will invest half now if you promise me that I get to invest the other half later on. And the proportion can also differ. It can be you invest 25% now and 75% in 12 months when you think that uncertainty has become clear.
Okay, but this you can use it on small businesses as well.
Yeah.
Imagine I have a cafe and I need investment, and I say I'm going to open another one in this new city. It's going to be amazing. It's new build and everything. So then I could use it on a small company too.
Absolutely. You can say that you feel as certain that you will have a monthly revenue of 100K within 6 months, but you need the funding to do the marketing and set up the store and everything. Sure.
Smart. So would you recommend this as a good way to have investors?
Yeah, absolutely. And all of these tools and tricks, the more of them you learn, the more you can navigate and play the field and take responsibility for your own situation. Because, of course, this is not legal advice. Always talk to your lawyer. But also make sure that you understand that you know where you're going and what the opportunities are, and also the risks. Because remember, any investment under uncertainty, high risk, high reward. But remember, high risk.
Yes, but as we talked about earlier episode, you don't always need the money up front. You can split it, and if you share vision with your investor, that's a good way to do it.
Yeah, exactly. Because, I mean, as the business owner, you have to remember that you're giving up, for the second portion, the option, you're giving up more stake in the company than you would if you were going out on a funding round when the uncertainty has turned out to be a positive certainty. But again, that's why you want the money during the uncertain times. So it's about taking risk and taking responsibility for your own situation and being a bit creative with the different kind of ways you can structure an investment.
Yeah, but also create new possibilities on the
Indeed.
market. Wow.
Indeed.
So good. And remember that this is not legal advice, it's knowledge sharing. Really good to remember.
Yeah.
So, and if you have a company, a startup, or anything, and you're thinking about taking on investors in uncertain times, this is a really good thing to do.
Yeah. You live and you learn. So here's another way to structure a deal.
Yes. Don't forget to subscribe and like our channel, because we're going to keep on sharing these tips and tricks and tools and everything you need to do good business. So until next time, flex your businesses and be magical as always. See ya.
Hej då!
Hej då!